Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Sunday, the 29th of November. Starting off at Sine Canode, where we've had a second attempt at the upside here after the full storm that we saw at the beginning of September. That was disappointing, to say the least, although there was a little bit of follow-through towards 6p. Here we've broken the October resistance line at 4p, pushed through the 20 and 50-day moving averages, the latter on an end-of-week closed basis. So hopefully this time we'll head through 6p and even head up towards the best case scenario target here, which is a July 2018 resistance line projection, currently pointing at 10.5p for a target for the next 1 to 2 months, obviously only while we hold above the 4p level. Plus points are the way that we've had multiple support points since July above the 200-day moving average, currently at 3.5p, so that should cause positive momentum over the next few weeks. Edenville stock, which was active on Friday, and interesting here that we had even though obviously this is sort of micro cap stock, we've had a bear trap rebound from below the October floor, and then breaking that line of resistance from October and the 20-day moving average at 0.03p on a weekly close. Hopefully that'll be enough to cause the shares to head towards maybe 0.05, 0.06 over the next few weeks. Bullish divergence in the RSI window as well, so that might add extra momentum. Flowmeric's not a stock which I look at very much, but the chart deserves a look today. The reason for that is the key reversal to the upside to end the week on Friday. The resistance previously for November around 84p, and while we're above that, looking for the top of that March trend line, or March channel rather, at £1.20, hopefully as soon as the end of next month. Going on to a stock which is normally rather slow, but hopefully this time it will accelerate a bit. The reason for saying that is we've had a double support for the shares below the 19p level so far this month, and closing last week above the 50-day moving average of 21p, and also that October resistance line. The longer we remain above the 50-day line, the greater the chance of a push towards the top of the rising trend channel from June last year, currently pointing at 35p, and hopefully we could hit that as soon as the end of next month or going into January. Friday was all about the Barry Rowe twins. First one is Lansdowne Oil and Gas. Actually surprising that the shares didn't actually go higher than they did on Friday. Perhaps people waiting for confirmation of the alleged deal, which is apparently imminent. Rising trend channel there from January, pointing to 3.5p, and that target valid while we hold above last month's resistance at 2.3p on an end-of-day close basis. In fact, only really back below 2p, and that broken resistance line, probably the 20-day moving average, really delays or kills the upside scenario. If you are a fan of the stock and looking to dream of how high it may go, there is a line of resistance from July last year, currently pointing at 6p, but obviously that's probably dependent on fundamental developments. Worth looking at Novocyte again. Obviously the COVID plays had having a bit of a kick in the teeth at the moment, but interesting that here you can see that the shares did break out of that near-term triangle, the November triangle, top of that resistance there around £7.70. We also have old neckline support at £7.60, so one would probably say that while we're above £7.60 on an end-of-day close basis, we're looking towards a retest of mid-November resistance as high as £9.35. If you're cautious on the stock, maybe wait for an end-of-day close above the 50-day line, just above current levels, so let's call that 7.95, so an update tomorrow, Monday, to maybe confirm that the shares are on their way. But for 7.60, the stop loss, or the preferred stop loss on a technical basis. Pantheon raised its money apparently, and now good to go on the fundamental basis at least. On a technical basis, we've just hit that line of resistance from October. Probably need an end-of-day close through 39p or 40p for the cautious traders, but the longer we remain above the 50-day line at 36p, the greater the chance of a move to the top of that rising trend channel from July, currently promising a 55p target, hopefully by the end of next month. Going on to stock which I don't even remember covering at all, PCF, but looks quite juicy on a technical basis. The reason for saying that is we had that gap higher in October, found resistance at the gap, found new support at the gap and the 50-day line, and also we've broken a line of resistance running from back in February around the 23 pence level. While we're above 23 pence, looking for the top of that rising trend channel from March up to 40 pence. Hopefully that'll be a relatively smooth ride and a reasonable risk reward as well. Providence did well, sort of on a charting basis. The other of the Barry Road twins, nice weekly close above last month's peak at 7.8 pence, and while we're above that, looking for the top of the rising trend channel from this time last year, currently pointing at an 11 pence target. But it's decent that we had the gap higher and also broke previous resistance as well. Probably at this stage only really back below the resistance of Thursday at 7.2 pence, really delaying the upside scenario there on a technical basis. Had a request for the following stock, and probably good timing for it as well. Pantera Resources, breaking that near-term down channel and closing the week with a key reversal to the upside through 12 pence, which is certainly a positive. The longer we remain above 11 pence, which is the broken October resistance line, the greater the chance of a retest of last month's resistance up towards the 20 pence level for Pantera. A couple more to go, just a couple to finish off with. First is Verditech, which is a stock which has been through the wars in the middle of the year at least. Current situation, it looks like we're sort of base building. The positive here is we're base building above the 200-day moving average at 7.5 pence. So while we're above that, we are the technical glass is half full, and probably all we're waiting for now is a clearance or a weekly close above 10 pence to allow us the chance of retesting August resistance towards 18 or 19 pence. You can see the top of the channel there heading towards 21 pence. Upside valid while there's no end of day close back below the 200-day line, currently at 7.5 pence. Finishing off with arguably the star of last week, or one of the stars of last week, Zoetic. This is looking very good on a technical basis on the back of the gap high that we had earlier in the week, and only barely tried to fill that gap, half filled it, and then pushed up again, which is normally a very positive sign, finding support above previous resistance as well, previous resistance at 46.7 pence. So while there's no end of day close back below that, looking for the top of this rising August trend channel up to 70 pence, and hopefully rather more than that over coming weeks. Stop loss at the moment, probably just an end of day close back below Friday's support at 49 pence, but one would expect the shares to start to accelerate to the upside. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.